Hey guys, it's Matt, your mortgage guy. We're here today to talk about how to get a mortgage with no income. Crazy, right? So, quick disclaimer, I'm a mortgage broker, not a tax professional. I can tell you most things, but please don't take everything I say as law. Go double check everything I say about taxes with a tax professional. So believe it or not, there actually are stated income programs out there. And pretty much what they are is you have 25% down. Most of them require it to be an investment property, so you're not actually allowed to live in it, and you have a little bit higher of an interest rate. But they're not going to check your tax returns. They're not going to check your pay stubs. They don't care about your income. All they care about is that you're buying an investment property that's going to cash flow. Crazy, right? So many of you are actually business owners and you have trouble qualifying with your actual income. So now we have a couple other programs that are good ways around it that kind of help cover those little bases. So for those of you that are self-employed business owners, or you're 1099, or you have some of those other weird scenarios, well, you make all of this money, but you actually can't qualify for a home because you write off all of your money on the income. And the bank is looking at it and saying, well, yeah, you made 100K last year, but you wrote off 90 of it. You only have $10,000 to qualify for your house. It's just not gonna fly. So what do? Well, that's when we have some of those other weirder ways to look at it and some of those weirder programs to help you qualify. Some of the ones we're going to talk about today are bank statement loans, asset depletion, 401k disbursements, and we'll talk a little bit about just what to write off on how to qualify with a self-employed income. So let's start with bank statement loans. What is a bank statement loan? Well, a bank statement loan is when the bank is going to take a look at 12 to 24 months of your business bank statements or your personal bank statements. They prefer business though. And what they'll do is they'll average out the deposits and withdrawals in that to give you an official income. And they're not going to use the income from your tax returns. That's actually really good for those of you who write off most of your income, but you still want to qualify for a house. I'm going to give you a quick example of what a bank statement loan can really be good and used for. One of my coworkers about 2 months ago closed one. And in that deal, this guy made about 150, 160K a year. A lot of money. Really successful, really hardworking guy. But as most successful business owners, he wrote off almost all of that income. And he was trying to buy a nice house and just didn't qualify at all. When we looked at his tax returns, he was only able to pull out about $2,000 to $3,000 a month. That's not enough to qualify for a big home. It's just not. So we put him in a bank statement. The bank took a look at the 24 months tax returns, and wouldn't you know, they gave him literally $11,000 a month in income. That put him from no chance in hell of qualifying to instant, you qualify for this home, you're good to go. It's a tool that's really used in those specific circumstances. So now we're going to talk a little bit about asset depletion loans. Pretty much what an asset depletion loan does is they take a look at your $100,000 in your savings, $600,000 in a 401k, $200,000 in a stocks and bonds account, and then they average that out over the life of the loan or a certain amount of time. They use that as an income to give you a boost to help qualify. And they just consider it as if you run out of money of your current job, they'll pull a little bit out of that savings account and you're good to go. It's a really, really good tool to help you qualify. So a 401k disbursement is a type of program where you have to be 62 or older. It's great to help yourself after retired go and buy a place, help your kids buy a place, or anything like that. All it requires is you're taking out a regular deposit, and it's just a nice little letter saying I'm going to take this much out every month, show history of taking that much out every month, and you use it to pay your bills. If you have that, or build a history of it, you can use that money to then qualify for a home. The only catch is it has to continue from 3 years after closing to be able to work. Thank you guys for staying around and learning about all the different ways to qualify for a home with no income. We covered everything from you don't want the bank to see your income, to you're a wealthy businessman who wrote off all your income, and even you're a retired person who you don't work anymore, but you have a lot of savings in retirement. So thank you guys again. This is how to qualify for a home with no income. It's Matt, your mortgage guy, and we'll see you soon. By the way, check out the website. It's getting an upgrade soon. Thanks.